Welcome friends. Today I am bringing to you two stock from emerging giant space. And today is the third episode of Wealth Creators Emerging Giants. As I have mentioned earlier, these companies are relatively smaller in terms of size but rapidly growing in that space. So they do bring a huge opportunities for huge return which the large caps or wealth creators first series stocks may not bring. Those stocks are more stable, but here you have opportunity of growing rapidly with little bit more amount of risk. So depending on the risk profile, one can construct the portfolio and have a mix of these two type of stocks. So before I proceed, I like to mention here, investing in stock is risky. So before investing, do consult your investment advisors or do your own research. The purpose of this video is purely educational, and I want to bring it to a large number of professionals who put their money in the bank, or they go with some tips. They can learn something, and with a very little amount of learning, they can take home a decent profit. That is the intent of bringing such series in front of you. So let's move forward and start the deliberation of today. So very first stock of today is Amritanjan Healthcare, Amritanjan Balm. All of us know it. So if you have headache coming from your investment portfolio, which you have constructed based on tips, use this balm. You will not have headache. So here, if you look at the performance of this company, the market cap is about 2000 crores. Not a very large company like TCS, whether it runs in couple of lakhs of crores. Return on capital employed is 38%, return on equity is 28%, and dividend yield is 0.61%. Debt equity is zero. So it's a zero debt company, and company has been doing decent for a long time. So when you look at the price chart for this company for long, this has characteristic of upward going curve, which I have discussed in the beginning. Now, certainly, this qualifies from that criteria. When you look at profit and loss, in 10 years, company's sales have grown from 100 crores to 400 crores, 4 times. Profit, 11 crores to 67 crores, 6 times. And when you look at the numbers, compound sales growth, in 10 years, company has grown at the rate of 12% CAGR, 5 years at 14% CAGR, 3 years 17% CAGR. And profit growth has been higher than the sales growth. This means company is able to leverage cost very nicely. Its profit has grown 18%, 25% and 40% for 10 years, 5 years, 3 years respectively. If somebody invested in the stock, 10 years, he had got a CAGR of 26%, 5 years 20% and 3 years 38%. Just compare with the bank deposit, which is about 5-6%. This is almost 5 times of return of the bank deposit rate. So is it not worth taking some risk? In my opinion, we should. And I do have investment in this stock. So I'm sharing the story with you, which I do, which I have myself invested. I don't want to just share something for sake of sharing, because that is not going to bring a commitment in this stock. The second for the day is Chola Mandalam Finance and Investment Company. So it's a finance company which primarily concentrates in area of vehicle financing, home loan, SME loans, home equity and loan against property. So a very large chunk of their portfolio is retail and a small chunk could be SME, this one. This company is very good in terms of performance, ROE 20%, ROC, because this company, all the banks and NBFC, they take a lot of loan. So ROC you should ignore. ROE is the parameter which you should look at. And dividend yield is 0.25%. Debt to equity is 6, which is in line with the NBFC category, because I have mentioned to you this company borrow and then lend. So obviously they will have a good amount of borrowing on their books. When you look at their price, see again, upward trending curve. Although this was excellent time during COVID, May 22 was the lowest price, because that time the loan book sort of collapsed. Nobody was taking loan because people were thinking that the world has come to a standstill and probably we may not have even life tomorrow. And after that, it is not seeing any looking back. So today it is trading about 700-800 rupees, little lesser than 800 rupees. So from that perspective, but as I mentioned to you, when you look at the investment possibilities, you should invest when price is close or lower than the 200 DMA. It is much higher than 200 DMA, so probably you should wait and look for a correction. Certainly it will come, because stock market is a game of patience and commitment. It's a patience or continuity. So you invest patiently and wait patiently. You will reap very large rewards. So friends, today I have discussed two stocks, emerging giant space. They are Amritanjan Balm, a balm for your investment problem, and secondly Cholamandalam Finance, a financing for your investment, something which will propel your investment. So if you like these stocks, do some more research before you invest, consult your investment advisor and get going. As I mentioned to you, I do have investment in these stocks. Friends, if you like the video of today, please do subscribe to the channel if you are not yet subscribed. Do circulate amongst your group through WhatsApp, Facebook, LinkedIn, because as per my goal, I want these talks to reach to maximum number of people who are either looking at the TV channel and investing, or investing on tips and burning their fingers. Therefore, this balm is very, very essential for them. And believe me, if you follow a disciplined approach of investment, you will never repent. So friends, if you like the video, please do put your comments and also press the like button, because that is going to go a long way in building up this channel. Thank you so much for your time and stay tuned.